Hello, welcome back to Chapter 11, the cost of capital. The appropriate hurdle rate. The cost of acquiring the fund to be used for investment is known as the weighted average cost of capital, or WACC. It must be a weighted average because firms do not typically use equal amount of debt and equity. So it wouldn't be correct if you use a simple average. The WACC is calculated as the weight of debt times the cost of debt plus the weight of preferred stock and the cost of preferred stock plus the weight of common stock and the cost of common stock. Note that because the interest is tax deductible, we need to calculate the after-tax cost of debt, which is the cost of debt times 1 minus tax rate. However, common and preferred dividends are paid from after-tax dollars, so no adjustment is made. Determine the weights. There are 3 possible sources of weights for the WACC. Book value weights. The book value of each source divided by the total book value of sources of financing. Market value weights. The market value of each source divided by the total market value of sources of financing. Target capital structure weights if management has set such a target. The cost of common equity. There are 2 primary ways of calculating the cost of common equity. Using a dividend discount model, so for the required return. For example, using the constant growth model, of course, we can see any of other models as well. Or we can use the capital asset pricing model. Note that we are using K for the required returns instead of R. The cost of preferred equity. Recall that the value of a share of preferred stock is given by dividend divided by the required rate of return of preferred stock. Therefore, we can simply substitute market price for VP and so for K. K of equal to dividend divided by the market value of preferred stock. The cost of debt. The value of a bond on our payment date is given by the following formula. Unfortunately, we directly cannot solve the above equation for KB, so we must instead use a trial and error process. Alternatively, we can use a sales yield function, see Chapter 10, or the rate function, either of which will do the calculation for us. Finding the break points. In order to create the marginal cost of capital chart, we need to calculate break point, levels of total capital at which the WACC is expected to increase, WACC at each break point. Assuming that we know how much of each source of capital that a firm can raise at a particular cost, we can calculate the break points as break point of common stock is the amount of common equity divided by weight. The break-even point for preferred stock is the amount of preferred equity divided by the weight of preferred stock. The break point of debt is the amount of debt divided by weight of the debt. Once each break point is known, we can find the WACC at those break points and create a step function chart.